So this is a update on July 17th, 2016. Looking at the overall market, and we're going to be looking at some other trades I'm considering now. First of all, let's look at I like to look at the very big picture to start off. There's the NYA. It's quite unusual actually because this, as I've pointed out before, was headed down and finally it bounced back up a bit, but now it's really looking quite artificial. I'm looking at the NYA because that is the composite index of the Nasdaq, the Dow Jones, the S&P 500, all blended into one, so I can get a clear picture. Now, as I've been commentating on, there's no question about it. This was resistance over here, and it did break above resistance, as I pointed out last weekend, and it did indeed continue higher, as you'd expect after breaking through resistance. There's an all-time high recorded on the S&P 500. But not on the NYA, which is why I'm looking at that for a confirmation. We've not yet seen that. So by all means, yes, there's some upwards action in the meantime, but the NYA, the composite, is not yet showing an all-time high to confirm that. So we have a bit of a piggish situation. This is a pig market. We've got the as I was explaining at the seminar recently, the criteria for looking at bulls and bears is not pointing either way. And I did, in fact, actually point out that we may well see a new high first before we move into the next bull market. One of the reasons for that was the upcoming presidential election. So I sense there's an element of manipulation going on. But anyway, the RSI is above 55%. That is a tick for the bullish camp. The price has closed above the 70-week. That's another bullish thing. But the 40-week is below the 70-week, and it should be above it. And over the past 6 months, the trend, it's still downish. It's definitely not up. So you've got 2 ticks for the bulls, 2 ticks for the bears, and you need a unanimous vote of all 4. And if you don't know what I'm talking about, then the DVDs will be out for the 99 Club members. That is on. Sending them out hopefully Tuesday or Wednesday this week. But this is a pig market. It's not a bull or a bear, which means it's kind of trendless, trying to find its feet. And what we see is the picture we've seen for this week. There's that line of resistance that got broken, and I commentated on last weekend to say that was a breakout, and it pushed higher on higher volume. So. There was definitely a healthy breakout. So what's going on? I mean, this is a pretty ugly chart, but what we've got is, the governments are talking about lower interest rates, and this is just a market that wants to go higher regarding stocks anyway. And there was that line that was a breakout. So, and I've got 2 choices now. I can either try to join in, or I could just stand out the way. The main thing is, this is not a market that I would want to be short of in the short term anyway, because although the overall picture is bearish, and this is still as I say, it's a piggish chart, but I don't want to short this anyway. Here's the daily chart for a short-term view. Now, it is starting to sort of peak out, perhaps roll over a little bit. What would be healthy action in the short term for this market was if it kind of pulled back here to around 2100 and then moved on from there. So if we have a pullback this week, which I'm kind of expecting after last week, if it stays at around 2100 before moving on and the whole move lower doesn't become on higher volume, then I'd say this rally definitely has legs. And like I say, you need to be getting out the way of that, or participating. Personally, I'm not going to be doing anything regarding stocks because as I say, it's a pig market, and what I'll be turning to is currencies and commodities. But that's a briefing for a different video for 99 Club members. So that will be coming up next.